I want to be clear, I do not respect the SEC.
We made the decision in the morning to limit the buying of about 13 securities on our platform. So we're really in unprecedented times. In order to protect the firm, we had to limit buying.
That markets are efficient because of active managers setting the prices of securities. Firms like Citadel, we're all running large teams of people that are engaged in fundamental research, trying to drive the value of companies towards where we think they should be valued.
Sam Bankman-Fried and FTX, he's been charged by US courts and the SEC with money laundering, conspiracy to commit wire fraud, and securities fraud for the collapse of FTX. The former chairman of NASDAQ, Bernie Madoff, built the largest Ponzi scheme in history. Over 4 decades, he faked records of annual gains to investors who thought he was investing their funds, when in fact, he was just using new investor capital to pay off older investors.
But the synthetic shorting and naked shorting, which is illegal, market maker can execute naked shorts insofar as they're facilitating a trade. The regulators are looking at that now as to whether or not there was this naked shorting by the market makers on behalf of the hedge funds in order to facilitate the shorts, and I think they're going to uncover that there were some issues there. But the penalty for naked shorting is really not significant enough to stop it. Citadel and Goldman and all of the players get fined constantly for doing this.
Hedge funds and other Wall Street firms have teams of analysts working together to compile research and analyze shares of companies. Individual investors do not have those resources.
I basically would like to ask the SEC why they didn't act on the morning of January 28th, because I was so scared. I can't tell you how scared I was. I was so scared. I can't tell you how scared I was.
Well, Thomas, what were you scared about? What does failure look like? You said we came close to breaking. What were you scared of?
I was scared of a domino bankruptcy. I tell you, the rules require the long brokers to go into the market and buy the shares at whatever price. So that drove the shares up to $480, and then suddenly it didn't go further, but it could have gone further.
So buying and selling those 200 shares would make the market maker $1. But as millions of shares are traded, the profits from the spread add up. In 2020, these brokerages collected almost $2.6 billion in payments for stock and option orders.
These brokers, including Interactive Brokers and Robinhood, that generate revenue from selling the order flow to market makers.
Business has always been done like this on Wall Street for over 100 years.
Our orders compete against each other to get the best prices. But if the order instead is routed to a wholesaler that has agreed to pay for it, the order is not going to an exchange and is not necessarily receiving the benefit of that broader competition.
As you mentioned about commission or zero commission does not mean it's free. It does have some cost inside. Some brokers have payment for order flow.
Disclosure alone, by enhancing the disclosure around payment for order flow, really will address it. United Kingdom, Canada, Australia, all have banned payment for order flow. I know we have different markets, different systems. We even have letters that we've gotten over the years, dating back over the last 20 years, articulating why it's not good for our system. So I really ask staff to consider that, but also to consider it only in the context of the entire market structure.
On January 28th, our daily deposit requirement was 10 times more than on January 25th. As a result, Robinhood Securities imposed temporary trading restrictions on certain securities. Robinhood Securities put the restrictions in place in an effort to meet increased regulatory deposit requirements.
The decision to restrict trading really was internal to Robinhood. We did not have discussions about that.
Like GameStop, AMC, all these meme stocks have brought naked short selling really to the forefront of the market's interest. This is something that's going on for a very long time in the small cap market and is very much a problem.
Has your husband ever made a stock purchase or sale based on information you've received from you?
No, absolutely not. Okay, thank you.
Those are fully collateralized tokens.
That markets are efficient because of active managers setting the prices of securities.
The order is not going to an exchange and is not necessarily receiving the benefit of that broader competition.
You heard the man. The order is not going to an exchange and is not receiving the benefit of broader competition because payment for order flow and dark pools are used to suppress equities prices. We're going to talk about the former SEC official who is basically saying that Gary Gensler has begun a shameful deep state crusade, and his actions are not just scandalous, are not just disgraceful, they're downright scandalous. Let's talk about the markets really quick. The Dow Jones today closed down for the 10th day in a row. Check out Charlie Bilello's post here. It says it's the longest losing streak in 50 years that we've seen on the market for the Dow Jones. All of the post-election gains have now been given back, and with good reason. The Federal Reserve today reduced interest rates by 0.25 percentage point. And everyone, all of the institutions, I should say, are pricing in increasing inflation. So you saw the SPY drop over 3%, about 3% today, from over 605 to 586.85 at the close, and still hanging out around that point at the very moment. And the bond market is also disagreeing with the Fed. The bond market is actually going against the Fed and showing that what the Fed is doing is incorrect, as mortgage rates should be dropping along with the federal funds rate. That's exactly the opposite of what's happening. The bond market is not taking it well at all, and neither are mortgage rates. Mortgage rates are increasing, and TLT, instead of increasing, is also decreasing in value. Not a good sign for financial markets, not a good sign for inflation whatsoever. Check it out. Well, Shay, you can become a member if you'd like to become a channel member. I'm going to be doing some exclusive live streams for members only. Here, it is somewhere down in the YouTube settings if you'd like. And I do a lot of one-on-ones on those. Let's see. So here it is. This is a former SEC official, and his name is John Reed Stark. He says that with this rush of sudden lame duck promotions, that Gary Gensler has begun a shameful deep state crusade, and his actions aren't just disgraceful, they are downright scandalous. So John Reed Stark says in a tweet here that Gary Gensler is clearly attempting to pilot the SEC enforcement division from the grave. Since Donald Trump's election, Gensler has promoted 5 senior officers within the SEC enforcement division at the SEC headquarters. 4 of these SEC staff cut their teeth as SEC crypto enforcement superstars, where they were spectacularly successful in basically attacking the crypto markets. And to provide a little context into how huge that is, at the SEC headquarters, there are only a small and limited number of senior officer positions within the enforcement division, and 5 senior officer promotions typically occur over the span of an entire decade, not within a single month. So Gensler is basically promoting a decade's worth of senior officers in a period of 1 month, when he's about to be ousted by Donald Trump on January 20th. But of course, Gensler is resigning and is ending his tenure with the Securities Exchange Commission on the 19th, the day before the inauguration. And these are career civil service jobs. These are not political appointments, so they cannot be removed. And Stark continues to say that notably, Gensler didn't make any public announcements. He did not issue any press releases or generate any fanfare regarding these promotions. Instead, the process was conducted discreetly, almost as if it were secret. This is entirely unprecedented, ladies and gentlemen, entirely unprecedented. And consequently, when the recently nominated Paul Atkins assumes the position of SEC chair and appoints a new SEC enforcement director, the new director will have 5 of their headquarters senior officers, the overwhelming majority of senior officers, already handpicked by Gary Gensler. So the marching orders from Trump to the upcoming chair Atkins from the White House and the crypto czar will undoubtedly be to clean house, and take names and immediately order that all SEC crypto-related investigations, litigation, and appeals and rulemaking permanently cease and desist. So these 5 veteran SEC staffers will undoubtedly, albeit respectfully, resist that mandate, but will quickly find themselves between a rock and a hard place. So Stark says that he feels for these 5 highly accomplished and experienced SEC enforcement staff members, saying that they're amongst the best in their field. Their efforts have been undermined by the actions of SEC Chair Gary Gensler. And he also says that Gensler has thrown all 5 of these people under the bus, compelling them to engage in a futile battle with future Chair Paul Atkins, which will ultimately result in their defeat. That is not just sad and disrespectful, it's selfish and egotistical. So Stark says that, like it or not, and that he doesn't, the people have spoken. They've elected Donald Trump, who has promised to become the first Bitcoin president, and President Trump should be applauded for keeping his promises, not surreptitiously undermined by Gary Gensler. He says, while I have not been particularly inclined towards deep state conspiracy theories, the stark reality is that Gensler's actions have brought such a plot to the forefront and put it in plain view. And it really ticks me off. And he did an entire podcast about this, about 40 minutes long. Here, I'll link it down in the chat if anybody wants to watch it. I'm not going to show it right now because it is about 40 minutes long. But I went ahead and dropped it in the chat there for you guys.
They believe in innovation. They believe this.
In which John Reed Stark, former SEC official, has a discussion here with Bruce Carton of Docket Media LLC. You guys can watch that if you like in full depth. But that is pretty much where we're at now. He definitely highly criticized these appointments. He says that they're meant to undermine the Trump administration. And he's saying that that Gensler is doing this purposely in order to undermine President Trump. So this is definitely some really big news here from the Securities Exchange Commission. This obviously just dropped today. And the news actually isn't from the SEC. The news is from former SEC staffer, official, I should say, John Reed Stark, because the Securities Exchange Commission didn't put out any news regarding this at all. And at the same time, we have multiple banks being fined for naked shorting, illegal market manipulation. Instead of doing more to stop market manipulation here in the States, Gary Gensler and the SEC are going after the little guys instead of the large firms that are doing the bulk of market manipulation. And while I applaud them for going after people that are defrauding financial markets, they're definitely not doing enough to stop firms that have admitted and have been caught time and time again in manipulating these markets. Check this out. Bloomberg says that South Korea has fined Barclays and Citigroup for naked short selling. And of course, they've been fighting against illegal naked short selling for a significant period of time, for a couple of years. And they were fined $9.5 million. $9.5 million USD by the SEC. Oh, I'm sorry, not by the SEC, by the Securities and Futures Commission, which is basically the SEC in Korea, according to the report, which didn't say where to obtain the information. But Barclays says it's considering a response and remains, quote, committed to maintaining the highest standards of professional conduct and the orderly and transparent operation of markets. And of course, they didn't respond to comments. Check this out. So, in case you guys don't know, naked short selling refers to an investor selling shares without first borrowing them or determining they can be borrowed, as is considered illegal in South Korea. And this is what got firms like Robinhood and Webull and IBKR, Archegos, Credit Suisse, and many others into the hot water that occurred, where they basically robbed retail investors of their gains on over a dozen securities, including SLV ETF, GameStop, AMC, COS, and many others. So I definitely see a huge problem here in what we're looking at right now. And this is something that continues to happen time and time again in financial markets. But really here, the fact that Gary Gensler is appointing 5 people in what usually takes a decade in the period of 1 month is just a downright scandal, for lack of a better word. This is a travesty. This shows that there is something happening here where these appointments are being made currently by Gary Gensler for whatever purpose. You can decide for yourself what those purposes might be, but in the same way that the Democrats want to appoint more senators and congressmen, the Securities Exchange Commission appears to be wanting to appoint more, pro-Gensler era regulatory enforcement officers, opposed to allowing Donald Trump's pick in order to be able Paul Atkins to do so. So that's definitely a huge problem there. Like I said, he called them lame duck promotions, and this is not great news overall. This is not great news. However, I have a feeling that they're probably going to have to fall in line with what upcoming chair Paul Atkins and Donald Trump say is going to have to happen at the Securities Exchange Commission. So these appointments are not going to be able to be reversed by Donald Trump himself. However, I don't know if Paul Atkins is going to be able to make those changes. I'm guessing if he really wanted to, he may be able to reverse them. However, he may just leave them in place and basically get them on board. Otherwise, they can be removed. So, Andrew, unfortunately, no, Trump himself wouldn't be able to fire them or get rid of these guys, Andrew. But that doesn't mean that the new chair, Paul Atkins, wouldn't be able to remove them. So, yes, Maynard, you are correct that Gary Gensler was, in fact, Hillary Clinton's campaign finance chair. He was the chief financial officer of the Hillary Clinton campaign in 2016. And as the CFO, he managed to not know about the $1 million payment made by the Clinton campaign for the what we know to be completely false and fake Steele dossier, which is basically the allegations that tried to pin Donald Trump as a colluder with Russia. And as we all know, that the Steele dossier was falsely fabricated. And as the CFO, the chief financial officer of that campaign, who is in charge of the bank accounts and everything else, you'd figure that somebody with as much experience and Ivy League schooling as Gary Gensler would be able to notice a missing $1 million, or the fact that $1 million was paid to a firm on behalf of of this Steele dossier. So you make of that what you will, ladies and gentlemen, and this situation here as well. But you should basically be taking that with a grain of salt and deciding what you think is really in your best interest here. Yep, here we go. Of course, everyone's talking about the S&P 500 falling today over 3%. And in that 3% fall, what did we see in the volatility index? We saw in the VIX. Oh, looks like somebody's watching this stream right now in this screenshot that they took of their phone. As the S&P dropped only 3%, that caused a 74% increase in the volatility index. So you can see that the SIBO market volatility index increased by 11.75. That's a 74% increase, bringing the VIX up to over 27, at one point over $28 today alone. And this is strictly due to the Fed's quarter percentage point drop in interest rates today. Like I said, Bond yields are dropping. TLT is dropping. The SPY and the Dow Jones are dropping. We've had 10 straight days which in a row of the DJIA, the Dow Jones Industrial Average, basically collapsing from over 45,000 to under 42,000. And for now, it's still a relatively small move in the grand scheme of things. But still, in the last 10 days, that makes it the longest streak since 1974. That means the longest 10 days in a row, the longest period of dropping DJIA in 50 years. And same thing going here. The bond yields, TLT, mortgage rates are all going exactly against the Federal Reserve right now because they are banks and institutions are well aware that inflation is on the rise. We are going to see a further increase in inflation, and tangible assets like silver and gold are going to rule the roost once again. This is not financial advice, but you should definitely be keeping an eye on this. I did tell you guys in 2022 when silver was at $17 an ounce and gold was a fraction of what it is now, that we were going to be seeing new all-time highs in gold, and that happened. I told you that we're going to be seeing, silver increase, basically double over the next couple of years, and that also happened. Silver went from $17 an ounce in 2022 when we were talking about it, and have continued talking about it since on this channel, to over $35 a few months ago, and still sitting over $32 today per ounce. What we're seeing with silver and gold will continue to increase as inflation ticks higher in the near future. So do your own due diligence and don't take my word for it. Go figure that out for yourself. Queen Bee, Maynard, Sasquatch, Tim, Dan, it's good to see all you ladies and gentlemen. Shannon, I appreciate you. Typo Neg, good looking out, my friends. I want to give a huge shout out and thanks to all channel members noted down below. Thank you guys very much for your support. If you guys are sick of the manipulation that we're currently seeing, if you're sick of seeing the Securities Exchange Commission constantly shuffling in leadership and people going from hedge funds to the SEC and back over and over again, and you've realized that they're not out here to look after our retail investors' best interest, you should probably take a look into Lit Exchange, an upcoming stock and crypto brokerage that is making firsts, historic firsts, over and over again. Because we are ready to change things for the better, because nobody else is going to do it for us. Not the market makers, not the hedge funds, not the Securities Exchange Commission or the CFTC. So Dario says, stay properly hedged. We remember. Get lit, ladies and gentlemen. I wish you peace and wealth. I'll be back tomorrow with another live stream. We can have a further discussion then, and we'll do another members-only chat, if not at the end of this week, on Friday, at the beginning of next week as well. Cheers, my friends. I wish you peace and wealth. Have a great rest of your day.